right? If you believe this is really the super cycle that I believe that it is, the consensus estimate for next year for Nvidia, I think, is around $3.50 per share.
You're way ahead of that.
We're closer to $5 a share. We've been ahead of the consensus estimate since the fall of 22. And what I say to my team, if the numbers are going up, the stock is going up, because the rest of consensus will have to raise their numbers.
You're
now,
like 40% above the street.
Again, there are numbers on the buy side that are as high as $5 a share. So if you go to $5 and you place a 30 times earnings multiple on that, right, you get to $150 a share. We're not that high. I don't think you need to be that high to own the market leader in AI. But I will tell you this, we part of our team was in Taipei last week, and you listen to what Jensen is doing. We see the orders for GB200. We see the orders for the B200. Nothing is slowing down, Scott, because they have to place orders 5 years in advance for these products. They have to go find power. They have to find data centers in order to build these supercomputers. And so everybody has been climbing this wall of worry. Remember, I was on when the stock went to 250, and everybody said sell. And then the stock went to 400, and everybody said sell. Why? Because it went up. They weren't doing the work on what was also going up, which was revenue and earnings.
Josh Brown, I think everybody who watches our program, at least at this point, knows your affection for this name, which you've owned for a long period of time. But what about this optimism that Brad is sharing with us? And when you ask the question, is it too much? Is it too far, too fast? The suggestion here, no.
Look, I continue to feel that the biggest risk to the market is all of a sudden somebody pulls back and decides they're going to get off the carousel of just endlessly building and buying. But it hasn't happened yet. And until it does, the problem with Nvidia, it never makes it easy, because it's not expensive enough to say, okay, that's it, I've had enough. To Brad's point, the fundamentals have been outpacing the share price growth miraculously for the last few years. And at some point that may change. At some point we may just see a runaway train that is no longer justified by what the forward earnings are going to be. But we are not at that juncture yet. So it's a really tough name for a lot of people, because it's not egregious. It's not Cisco in 1999. And quite frankly, one of the underappreciated parts of the Nvidia story, and maybe Brad wants to weigh in on this, people think it's just chip sales. And then okay, I hope they buy more chips. Once you put these chips in, you are now spending money with Nvidia as a customer for the foreseeable future. You've made a huge investment, and now you're involved with their software, with their environment, with their services. In a way, it is very similar to Apple, but from a B2B perspective.
Everybody's got to, we all know. We've come a long way fast, Scott. I'm not telling people at home to shove it all on the table and go all in today. Our net exposures are 60%. What does that mean again? Reminder for folks at home. That means I have $6 out of $10 at risk long the market in our hedge fund. I'm not all in. I'm not 100% net long, right? And at the start of 23, remember, when the rest of the world thought the market was going to crash, we were all in. Right? So I think you have to pay attention to prices. You have to assess risk reward. But there is no doubt in my mind that Nvidia should be at the top of your list of technology allocations.
Hello, everybody. This is a quick weekend update for longer-term investors in Nvidia, or potential longer-term investors. You can see here the monthly chart. We are up from the daily lows of Friday, so now it's 107, and according to Gerstner, this would mean 29 multiple on a 365 EPS. Kramer during the week talked about that he is not willing to sell Nvidia at a 23 multiple he did say, for the premier growth stock of our era. He is rather willing to take some pain. Okay. So what would pain mean? For me, the next pain area, meaning lower prices, would of course be the 96 area. I drew it here in violet. And if we break this area, then of course the 80 area might be in play, and then the 20 MA on the monthly would catch up to the price. And then hopefully we get some stabilization here and move back up again. That's it for today. See you tomorrow. Goodbye.